Good morning, my name is Alex Woods and I'm a civil litigator practicing in the area of financial irregularity and principally on payment protection insurance. I'm concentrating my attentions, have been doing so for the past 3 years, on the mis-selling of payment protection insurance. Now this video is to ask the big question about whether or not I should use a claims management company. I'm addressing this posting to insolvency practitioners specifically, but I'm trying to keep it general so that it could be of use to consumers as well as other lawyers or other people working in the sector or claims management companies themselves. And I'm also posting because I picked up a feed on a blog with the Law Society Gazette which says it's about time we should have a debate about whether or not claims management companies are required and what useful function are they serving mankind. So that's why I'm trying to keep it general. You'll see I've broken it down into 10 sections, so please do look at the 10 items on this morning's posting so that you can jump to anything that you think is relevant, because warning, it will be a relatively comprehensive posting today. So to start with the first of those 10 points, and really you can take this point 1 and then move on and do something else for the rest of your day, because you've probably got it all in this point 1, because the simple and really rather reasonable, rational and common sense answer to the question of whether or not claims management companies are necessary is, well, and someone's posted this on the Law Society Gazette blog, just because I can rewire my house doesn't mean that electricians are redundant. And the simple truth is we have to be honest with ourselves about the fact that we tend to have blanket prejudices. I don't know what it is about human nature, but it suits us to have blanket prejudice about things. Whether it's, in my case, it's football, I'm not into football, whether it's bankers, whether it's lawyers, you know, whatever it is, we tend to have, and you know, from one year to the next we swap one prejudice for another. Now we have now, and indeed the banks have quite successfully, and the British Bankers Association has quite successfully created this sort of blanket prejudice around claims management companies. I was on Rip Off Britain. I had the I was about to say indignity. It was a little bit undignified because they put me for 30 seconds just before Eric Leanders of the British Bankers Association, and I think it was Gloria Hunniford, spoke to him for about 5 minutes, and he ran rings around her because when she took him to task for the activities of his member banks for the PPI mis-selling scandal, his response to her was to say, well, Gloria, the problem is the hundreds and thousands of bogus claims that are being brought by claims management companies. And he managed to successfully spin the whole interview round to cast the blame on the claims management companies. So we got, I mean, it would just be ridiculous to think that all claims management companies aren't worth looking at. So that's the very first thing to say. Please park your prejudices at the door when you're looking at the question. If you're an insolvency practitioner, you may be considering, now that the guidelines have come out, you may be considering whether or not you instruct a claims management company to process your payment protection insurance and insolvency. And I don't think, you should obviously look carefully at them, but please don't rule them off just because your phone is constantly ringing from the dodgy ones who are constantly cold calling you. Now this brings me on to the second point, which is, nevertheless, as the press report, whether it's the Independent, whom I've just been reading an article about them online, the press report that I think about 1 in 5 claims management companies have been closed down by the Ministry of Justice. Helen Hunt, the head of the Ministry of Justice, has gone on record of saying it's disgraceful the way that these claims management companies are behaving. They're bringing in a raft of, a bunch, not a whole raft, just a sort of small bunch, like a bunch of bananas, rather than a whole boatload of changes in the law. But they are bringing in a bunch of modifications, of changes to the rules by which claims management companies are regulated under the MOJ. Which magazine aren't happy about some of them because they can still cold call, and it's seemingly that they can kind of still wriggle a little bit, so consumers aren't entirely protected. On the other hand, the claims management sector is up in arms because they're now not allowed to publicise on their websites and their literature that they are regulated by the Ministry of Justice, even though they are. So make sense of that. The long and short of it means that if just because a claims management company is regulated by the Ministry of Justice, whether they're allowed to say it on the literature or not, is absolutely no reassurance to anybody that they're going to act in a proper and professional manner. Now, I've dealt with a number of claims management companies over the past 3 years. They've often rung me up wanting to build relationships and refer cases and so on and so forth. And I've had the unpleasant experience of being on the wrong end of the phone to Carl Wright's girlfriend, Asha, I think her name was, who really got quite tetchy with me when I started to sort of drill her into just how she proposed to send me, 1,000 claims a month, and how much money we were going to make and how we were going to charge the clients upfront fee. So there are charlatans out there. Carl Wright of Cartel Client Review is the famous one, and so there are people, there are a certain type of character, and it's no surprise that there's quite a crossover between the world of lending, the world of banking, the world of subprime lending, well, not just subprime, banking generally. There's a clear crossover between the same people who are working in the banking sector are now working in the claims management sector. They're of the same breed. So but look, you're not daft enough. I mean, if you're an insolvency practitioner or a professional and you're used to dealing with businesses, you're not daft enough to fall for the charlatans and the villains. And as I say, at worst, they're probably only 1 in 5 of claims management companies fit that profile. A bigger concern to you is whether they are running their operations professionally, and this is why the problem with the claims management company is that it is designed to shell Ps. The bigger the claims management company, the more Ps it will shell, the lower its cost base, the greater the economies of scale, the more money it's going to make. It's all about turnover, and it's also about turnover quickly, obviously, to protect the problem, to deal with the problems of cash flow. So now that means, and that's particular relevance in the financial mis-selling sector, and I'll come on to this later on in this video bulletin. This is a particular problem in the mis-selling sector because shelling Ps means that they take low or sometimes even derisory offers from the banks, and they don't give the full service to their clients, and they don't achieve full compensation awards from for their clients from the banks. And just as claims management companies are motivated by turnover, the vanity of turnover, likewise banks are morally neutral animals too, particularly the bigger ones, and are motivated by getting to the top of the FTSE 100 and by shareholder value, etc., etc. So the last thing they want to do is have to employ someone, an extra person in their complaints processing team in their big office in Cardiff or wherever it is, or overseas, at 30k, and it probably will have to be a mainland person who's actually educated in a bit of English law and in the FSA guidelines for PPI complaints handling. They'll have to spend 20-30k salary on that person, and then or like 10 of these people, and then they'll have to get that person to look at each individual consumer's claim, and they'll have to see, well, actually we're only giving this person on their credit cards the premiums plus simple 8% and not compound interest, or this person had another loan or a credit card with us. And so there are various issues around the fact that clients are often not likely to get full compensation, and the banks are, as I say, morally neutral animals who really aren't going to spend money when the thing that they're most interested in right now is shoring up their balance sheet. Sure, Lloyd's, for example, want to put the payment protection insurance scandal behind them, of course, but they don't want to do it in too cost thirsty way, and so they are not likely to pay out full compensation. So the claims management industry can do a good service if they are fighting their client's corner. And the problem is, as I say, they're unlikely to want to fight for full compensation. The most, or probably even the majority, perhaps even the vast majority of claims management companies will get the offer. There's almost something complicit going on, because the banks will make an offer. The claims management company needs to accept it because it needs the cash in that month. It will write a letter to the client saying, you've had an offer from the bank, do you want to accept it? So that they're not involved in the client's decision to accept the bank's offer, so they can't be done by the regulator for advising the client to accept an offer which may not be appropriate redress or fair redress. Two of the words in the PPI complaints handling guidelines that the FSA produce. They're not too bothered about that. So the client, because they'll have lifted out, they're pulling down the shutters and moved down the street to open up business for the next scandal, whatever that is, after 3 years. So they're not too concerned about getting their clients full compensation. So the bank makes a low offer, the claims management company sends a low offer to the client says, oh, £5,000, all right, yeah, please, I'll take that, and then that offer is accepted. And people like me get the fallout of all of that, because I have clients who kind of scratch their heads, some often quite intelligent clients, and said, hang on, I'm not getting full compensation for this payment protection insurance. So there's an institutional problem with the way a claims management company is driven to do business. That means, aside from the fact that they're dodgy, these aren't dodgy, these are just people trying to make a living and run a business. But unfortunately, unless they have an ethical bone in them, unless they have some professionalism in them, then they are not going to want to fight their client's corner for full compensation. And if you're an insolvency practitioner, and if you, for example, and you are using one of these large claims management companies, be careful. Make sure that they are actually fully realizing that asset. Because, arguably, if they're not, you're not in proper compliance with your own regulator, and your own rules. So that's why one has to be careful. So here's the second part of this video posting, in which I'm going to run through some, if you like, some key indicators of how you can verify whether or not a claims management company is worth doing business with or not. Trying to help you discriminate from the good, the bad, the ugly. I think the first thing to note is that in my travels around the claims management industry, and I've probably met a dozen, probably more like dozen, perhaps more like 2 dozen actual contact with claims management companies over the past 3 years. I can quickly now tell one from the other, sift one from the other. For example, I sat down in Cafe Nero last year with a claims management company affiliated with a law firm in the north of England, who said, look, they had a project to sue solicitors for presiding over wrongly sold payment protection insurance in respect of people doing second mortgages on their council homes. And he's immediately talking to me about numbers, about how many hundreds of claims they're going to refer each month, and the vibe of the business propositions that I get are always trying to sell me huge numbers, and they're always trying to talk and negotiate about the percentage cut of the compensation that they're going to get. The only claims management companies that I deal with are the ones who are prepared to wait for me to get my legal fees paid by the other side, and I then give them a percentage. Or where I outsource basic work, perhaps to a claims management company, and turn it into a service company. That's also a good business model. So I tend to want to speak to the owner of the claims management company, who probably won't be easily visible, and to find out who he is, Recently, I invited a owner of a claims management company to networking functions I organised, and I asked everyone to talk about their interest in business and their particular passions in business, and he talked about the fact that he had been missold payment protection insurance and a hire car, a hire, God, I've forgotten the word, some sort of a car financing agreement, and they'd slipped in the PPI. And he'd gone away, he was a military man, he'd kind of looked at it in a methodical way and decided that it had been slightly shafted, and he'd then brought a complaint. I think it was Lombard, the company behind this PPI in providing finance for buying cars. So he talked about the fact that he'd first got into the sector because of the fact that he felt that the banks were ripping people off. So he came at it from a point of view of sort of passion and perhaps moral rectitude, if you like. And he also talked about the fact that he wanted to see that people in later life, when they're drawing their pensions, that pension hasn't been shrunk to a tenth of its size by a lifetimes of the financial sector sucking out money from their salary in terms of commissions and unwanted and missold financial products. So the key thing there was that he seemed to be coming from the right place in terms of running a claims management company. I've known him now for 3 years. It takes a long time, obviously, to get to know someone properly, and I now think that he's in the game for the long haul, and I think that's probably the next point is professionalism and being in the game for the long term. So if a claims management company was only just set up last week, you might want to be a little bit suspicious, and you might want to find out whether or not they are going to be in the sector for the long term. I think the other thing is professionalism, and what I've discovered here is there are three things to be said on this point. Are they sitting on claims? And I've discovered a claims management company, heard an anecdote about quite a large claims management company. A lady was telling me she went into their offices and she opened the door and she saw a huge pile of papers which were all those PPI complaints, all those cases which were in some way complicated or awkward or difficult or complex, and the approach to the claims management company was to just leave them in a room, because that particular claims management company is motivated to shell peas for a period of time, then close down the business and take out the profits. So that was one interesting anecdote, and a professional claims management company will obviously look to address the problem cases. And the second thing is the regulatory or ethical approach of the claims management company, and the issues of cold calling. In the case of one claims management company that I consult to, I was having a board meeting with them, and I was there with the entire office, not just the people who run the business, but the people who are doing the day-to-day work. And I said to them, so how do you source your claims? Obviously, presumably you use the phone and you use text messaging and such like. And I alluded to cold calling in a sort of in a way that as a leading question, so that they're encouraged to say that of course we cold call. I tried to be a little bit smart about basically duping them into thinking that I thought that cold calling was absolutely fine and run of the mill. So anyway, the whole room sort of erupted, and everyone said absolutely not, we never cold call ever. and it was clear to me, the penny dropped at that point, that it was a claims management company worth doing business with, because they had basically high ethical standards. The third thing to note, and not all claims, I think very few claims management companies sort of take this as seriously as they should do. Very few of them know much about the PPA complaints handbook that the banks have to comply with when they're adjudicating payment protection insurance claims, whoever's brought the claim. And you might want to ask the claims management company you're thinking of doing business with, what is DISP? Do they know what DISP is? Capital D-I-S-P. And do they know what the relevant provisions of DISP are when it comes to the adjudication of complaints? And so you might want to quiz them about that, because I doubt that, looking here at the relevant sections of the FSA's guidelines on how banks should adjudicate complaints, and the main DISP that's relevant and all the claims management companies know about is that once they've adjudicated and decided that payment protection has been missold, in coming to decisions about what redress to make, because redress is this key area, the full compensation for me is the key area, they should, as far as possible, put the complainant back in the position they would have been had they never taken out the insurance. Now that's a standard provision, but there's then another provision in the guidelines called, which is DISP 3.9, which says that the firm should also make additional redress where their breach in the missale of the payment protection insurance has led to further foreseeable loss as a consequence. It gives an example of affordability where it has affected the consumer in terms of other borrowings, and it also gives the example of default charges and other charges that might have been added to other borrowings that the consumer has with that bank or perhaps any other bank, and that is not a guideline that the banks are really all that interested in looking at, because it does require, there is some level of complexity involved, and I suspect that hardly any claims management companies are referring banks when they come to the decision about how much, because by now they're all accepting that PPI is being missold and they're just trying to hand the money back. I suspect there are very few who are referring to the bank's own guidelines, let alone sending cases to a lawyer to look at the case or even to litigate the case. So that's another sort of, if you like, hallmark in terms of finding out whether or not a claims management company is running its affairs in a professional way. So there you go. I've given you a bit of a whistle-stop tour around the claims management industry and the sorts of things that I think you need to look out for, and the ways in which you can assess whether or not you think they're a reputable claims management company or not. Now here's the other aspect, which is I believe that you should also establish that the claims management company in question has a relationship with a law firm. That is, in my view, quite important, and you will see, if you look at my hall of shame, I am enough of a geek that if I get a cold call from a claims management company, I take them as far as I can into finding out whether or not they've got a legal department, whether they've got an in-house legal team, indeed whether they've got the ability to issue proceedings if they don't feel that the bank is providing proper full compensation, proper redress, fair and appropriate redress. And that hall of shame is claims management companies who've cold called and then told me that yes, if the banks don't pay me full compensation, they've got a lawyer who will get heavy on the banks. And I'll come on to why that is of real concern in my final section on whether cold calling is illegal. It'll be the final item on this posting. But for now, I think it is important to know that the claims management company has a relationship with a law firm because of the issues I've alluded to in relation to full compensation. Now, you may be thinking, well, what's he talking about? Basically, someone's missold PPI on a loan or a credit card. You know, they're getting back £5,000 compensation. Just accept it and put it behind you. But you know, we in a lot of cases, particularly where credit cards are involved, the amount of compensation that consumers are entitled to is often far higher than the banks are offering. Now, I'll give you, I see the ones that. So I'm just going over to my laptop, but you can still hear me. I'm seeing the ones that are, you know, need litigation and need a lawyer. I've got one here, NatWest. On 12th of January 2000, and this is my letter before action to NatWest. On 12th of January 2012, you made what can only be described as a surprising offer to our client of a refund of £1,531.41. It failed to include interest, both interest associated with the account as well as statutory interest, and it failed to include premiums for any earlier periods. And this was also a credit card which had been bought from an old credit card company. I think this was Morgan Stanley. Now it's now trying to wriggle out of full compensation by just giving back to the consumer the amount of PPI premiums that were on the credit card since the card was bought from Morgan Stanley, and they're not even given proper interest. They're not even given simple interest on top of the award, £1,531. They are hoping the consumer's going to go away, take it or leave it. It's what they are doing here. And you know, you look at these articles in the press about claims management companies being pointless. Well, okay, perhaps most of them are, but if they're actually fighting a corner and trying to get full compensation, and if they're able to instruct a lawyer to litigate if necessary in complex matters, then I think they are offering a decent service and they are entitled to their 25% cut. So that is now, in fact, our calculation of the amount of compensation that the client was entitled to in that NatWest case, that's 2012, not that long ago, is that the client is entitled to £29,000. So, you know, it's logical. A bank does not want to have to cough up too much with this payment protection insurance scandal. The bill is going up each month from 9 billion to 10 billion to 13 billion. So they simply want to give the money back, or rather they want to settle claims as quickly as they can with as low amounts of money as they possibly can. And then in some ways the bigger claims management companies are in something of a conspiracy with the banks in terms of, you know, taking their offers, because otherwise they're going to have to fight for 6 months, and you know, they'd rather have a small amount of cash now than a large amount of cash later. Of course, the person who loses out is the consumer, but he's usually none the wiser. The other reason why I think it's important that the claims management company has a relationship with a lawyer, that's the case we're going to issue proceedings on, and counsel has given us above 60% prospects of success on that case. The other reason is, you know, sometimes it's, and perhaps more than sometimes, it's a case of one word against another. I had a case at the last law firm I was with where the bank in question, HSBC, had rejected the client's complaints. So this was just an outright rejection rather than an argument about the quantum of the claim. They had rejected his complaint completely, and because the nature of his complaint was to accuse the bank manager in question of being of lying, frankly. So that was something that went to the Financial Ombudsman Service, and it was adjudicated by they are junior lawyers there. They haven't got experienced lawyers by any means. In fact, most of them are not qualified lawyers. They are legal trainees. They're good, but they're not infallible. And this particular adjudicator had supported HSBC and rejected the client's appeal. This had then gone to an ombudsman, and the ombudsman had backed up the decision of their adjudicator. So even the ombudsman had rejected the client's claim. And it all came down to the fact that the paperwork was an apple pie order, all the boxes were ticked, but the client was quite clear in his instructions to me. He had been put into a room with the bank manager and another bank representative, and been told that if he wanted to remortgage in order to get some money out for his business, as an aerial photographer who wanted to buy an aeroplane, they were happy to do that, but they would insist that he take out insurance on top. And this is one word against another. Obviously HSBC aren't going to supply evidence to the Financial Ombudsman Service saying that, well, our bank representative basically sweated the client out until he said yes, because he was sort of so desperate for the loan. So you have this issue, and unfortunately the Financial Ombudsman Service is not the right tribunal where you've got disputes of fact of that nature. And there are plenty of payment protection insurance cases, particularly credit cards, where consumers have had PPI stuck on their credit card, sometimes completely without their knowledge, let alone having strong arm tactics being used in which they're required to take out the PPI, or they're not going to get the credit card in the first place, or the loan in the first place. So the other reason that the claims management company should have a lawyer is because in order to do right by the client, they will come across, it'll be a minority obviously, but it might be a not insignificant minority of PPI claims that really do need a little bit of litigation. And can I just say on that note that the law firms, are equally fallible as claims management companies in my view. There's plenty of law firms. For example, there are plenty of high street conveyancing law firms who had a real slump in business over the credit crunch, and opened up financial mis-selling departments to try and shore up their business. And they have been turning over these claims just like the claims management companies, and in fact they've just simply been sending them all to the Financial Ombudsman Service so that they give the Financial Ombudsman the work to do rather than they do it themselves, and they take a percentage cut. And I think a lot of them again aren't fighting for the client's best interest in trying to get their clients full compensation. And also a lot of lawyers are extremely 9 to 5, and it just can take forever because of all the regulatory red tape, and because of lawyers' paralysis in the face of their regulator, the SRA. It can take them forever to get round to to actually opening the file on your case. So which is something that claims management companies are good at doing. They actually will move quite quickly in order to try and assess your complaint, in order to try and... So there you go. I said that the final... This is a long video, but it's near the end. The final thing I wanted to say was, question I wanted to address is cold calling illegal? And the reason that these claims management companies are on my Hall of Shame, I don't know whether you're looking at the camera, the Hall of Shame is probably there, isn't it? On the Hall of Shame is because whilst cold calling is allowed, and as I say, these bunch of new rules that the Ministry of Justice have brought in aren't going to ban cold calling, nevertheless, lawyers, solicitors, cannot take a case on from a claims management company where that case has been obtained by cold calling. So if you send, whether you're a consumer or insolvency petitioner, if you send your claim, or indeed any claims, to a lawyer, them having been obtained by a claims management company that has cold called that claim, that lawyer is in breach of the Solicitors Regulation Authority and their code of practice if they then take that claim on. And there's case law on this that says the solicitor can't just have his head in the sand and not ask questions. He's actually got to a certain extent be active in assessing whether or not that claim has arisen as a result of a cold call. So that rules out the possibility of ever using a solicitor on your claim if the claim has been obtained by cold calling. And I hope if I've conveyed nothing at all in the last 30 minutes of this video posting, I would have conveyed the message that whilst the banks might have capitulated over the mis-selling of payment protection insurance, they're still not quite there in terms of refunding and redressing the consumer with their full compensation. So that's why cold calling is an issue, not because it's illegal, but because that solicitors aren't allowed to cold call, and they aren't allowed to have work introduced or referred to them that has been obtained by cold calling. Oh, okay, well, there it is. I've come to the conclusion of that video bulletin on claims management companies and whether to use them. By way of closing headlines, I think that there are bound to be claims management, and there are, because I know one or two who are quite professional about the way they're going about running their businesses, and they are in it for the long term, and they have got an enthusiasm and a passion in what it is that they're doing. It's often overlooked, but often the real hallmark. If someone's passion is purely in profit and turnover, then they are likely to be tempted to skip a whole load of corners in a sector where there's a real danger of getting a whole load of trouble if you cut corners in these cases. Please do call me if you have a claims management company that you're interested in forming a relationship with. I mean, I am actually a consultant. I'm in the process of getting a law firm set up, and I've been allocated a case officer last week, so I am perhaps, fingers crossed, barely weeks away from being a law firm. At the moment, I'm still a consultant as of the 22nd of April 2013. So I can come and I can assist you with consultancy services. I declare an interest if you need them, if you want the claims management company assessed. I also have relationships with a law firm, and also have a relationship with a claims management company myself. So please don't hesitate to, or just comment, or to email info@redwoodlegal.co.uk if you want any consultancy in this sector, in this area. Many thanks.